As we begin this episode, let's take a look at some of the key stories that have been making headlines. The UK is once again facing a leadership change, with Andy Burnham potentially taking over as Prime Minister. Investors are watching closely to see how this transition will impact the economy, particularly in terms of energy policy and the country's approach to oil and gas activity in the North Sea. Meanwhile, a dangerous heatwave has been sweeping across Europe, highlighting the importance of domestic energy stockpiles and the dangers of over-reliance on imports. In other energy news, oil prices have continued to tumble, reaching pre-war levels as crude shipments through the Strait of Hormuz have increased. In the United States, the latest Personal Consumption Expenditures Index has shown that inflation remains a concern, with the core PCE increasing by 3.4% in the year through May. This data has significant implications for the Federal Reserve's policy decisions, particularly when it comes to interest rates. As we navigate these complex and interconnected issues, it's essential to consider multiple perspectives and stay informed about the latest developments. On this show, we're committed to providing you with balanced analysis and insightful commentary, helping you make sense of the ever-changing landscape of global finance. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of cryptocurrency, where Bitcoin has been making headlines with its recent price drops. The cryptocurrency has broken below $60,000 for the third time this year, sparking concerns among investors. According to reports, bear market sentiment has hit an all-time high, with liquidity being siphoned towards other investments such as AI names and World Cup betting. Some experts point to the collapse of Strategy's cash reserve, which has dwindled from 7 years to just 10 months, as a potential trigger for Bitcoin's bottom. Meanwhile, ETF outflows have entered a second phase, with spot Bitcoin ETFs posting significant combined outflows over the past 2 days. Liquidations on June 24th to 25th totaled roughly $1.8 billion, primarily affecting long positions. It's worth noting that not everyone is pessimistic about Bitcoin's prospects. Some investors remain bullish, citing the cryptocurrency's history of resilience and potential for long-term growth. Matt D'Souza, CEO of Blockware Solutions, recently stated that he believes Bitcoin will reach $100,000 by 2025. As we navigate this complex and ever-changing landscape, it's essential to consider multiple perspectives and stay informed about market developments. Whether you're a seasoned investor or just starting to explore the world of cryptocurrency, it's crucial to approach these markets with caution and carefully weigh the risks and potential rewards. In other news, Strive's daily payout security, SATA, has delivered a positive total return since its inception, despite the current bear market. The company's 18-month cash reserve provides a measure of stability, and some experts believe that the digital credit universe could reach $3 trillion in the coming years. As we continue to monitor the situation, one thing is clear: the world of cryptocurrency is full of surprises, and investors must be prepared for anything. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to shift our focus to a thought-provoking article that caught my attention. It highlights the challenges faced by Canadian companies in securing growth capital, particularly when it comes to scaling up and developing intellectual assets. The article suggests that Canada's investment culture has been slow to adapt to the changing landscape of the economy, with lenders often prioritizing traditional assets like real estate or natural resources over innovative ideas and intellectual property. This can lead to a brain drain, as companies are forced to seek funding from foreign investors, resulting in the loss of valuable IP and potential job opportunities. The author argues that Canada needs to develop its own financing infrastructure to support ambitious ideas and enable them to mature into successful enterprises. This requires a shift in mindset among private lenders, who must be willing to take calculated risks on innovative companies with high growth potential. It's essential to acknowledge that this is not a call for government handouts or subsidies, but rather an appeal for the private sector to step up and provide the necessary support for scaling up companies. By doing so, Canada can create its own success stories, like SpaceX, where bold ideas are funded and allowed to flourish. The article concludes by emphasizing the importance of creating an ecosystem that fosters innovation and growth, enabling Canadian companies to compete on the global stage. As investors, it's crucial to recognize the potential for long-term value creation in these types of investments and to be open to supporting companies that are driving progress and change. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.